That's right. It's decision day for the MPC, the Central Bank and Island. The CBN Governor is already out from that meeting and already on. So here we go.
Risks of spillover associated with broadly weakening global recovery. These have been further exacerbated by uncertainties emanating from lingering supply chain bottlenecks due to Russia-Ukraine war and continued COVID-19 lockdown in China. Consequently, global trade maintained a steady decline while inflation remained unabating despite progressive rate hikes by several central banks. The risk of yet another global recession will be extremely damaging for fragile economies still confronted with the lag impact of the 2020 recession, especially for emerging markets and developing economies currently confronted with huge capital flow reversals and tightening global financial market conditions. Consequently, the IMF, International Monetary Fund, in its July 2022 growth forecast, further downgraded global output growth for 2022 and 2023 to 3.2% and 2.9% respectively, from 3.6% apiece. In the advanced economies, inflation remained high and considerably above the long-run objectives of several central banks' threshold despite progressive rate hikes, due largely to a persistent increase in the prices of food and energy. In major emerging markets and developing economies, the uptrend in inflation is expected to continue in the medium term, driven by legacy structural issues, elevated exchange rate pressures, rising capital flow reversals, in addition to the outlined shocks from the global economy. In global financial markets, investors have continued to rebalance their portfolios as yields on fixed income securities improve with the ongoing policy rate increases. Gold prices are thus gradually declining as investors move steadily towards the fixed income markets. In addition, risk-averse portfolio investors have continued with reassignment of their portfolios from perceived riskier emerging market securities to less risky advanced economy securities. Domestic developments. According to National Bureau of Statistics, NBS, real gross domestic product grew by 3.54% year-on-year during the second quarter of 2022, compared with 3.11% in the first quarter of 2022 and 5.01% during the corresponding quarter of 2021. The economy has thus maintained continuous growth for 7 consecutive quarters, following its exit from recession in 2020. This consistent positive performance was driven largely by the sustained growth in the non-oil sector, particularly services and agricultural subsectors, supported by continued policy interventions as well as credit expansion to the private sector. While output growth remains positive, the committee was concerned about the contraction in economic activities as indicated by the Composite Purchasing Managers Index, which fell to 47.2 index points in August 2022, below the 50 index points benchmark, compared with 50.4 and 51.9 index points in July and June 2022, respectively, an indication of a weakening output situation. The contraction was attributed to a decline in production levels, new orders, inventory levels, unemployment levels, and persisting shocks from the global economy associated with both Russia-Ukraine war and the unabating pandemic, as well as other domestic shocks. The committee, however, expressed optimism on the economy's recovery in the short to medium term in view of the unwavering support by both the monetary and fiscal authorities in Nigeria. The committee noted the continued uptrend in inflation for the 7th consecutive month, with headline inflation year-on-year rising to 20.52% in August 2022 from 19.64% in July. Both the food and core components rose to 23.12 and 17.2% in August 2022, from 20.02 and 16.26% in July 2022, respectively. The hike in energy prices, such as rising price of automatic gas oil (AGO), hike in electricity tariffs, as well as the perennial scarcity of premium motor spirit (PMS), contributed significantly to the building of expectations, thus pushing up the cost of transportation and production. Other contributory factors include the broad-based insecurity across the country, which continue to dampen production activities generally, legacy structural factors such as inadequate state of critical infrastructure, high cost of importation of essential grains such as wheat, and increased demand for money associated with the forthcoming electoral campaign season. The ongoing monetary policy tightening by the U.S. Fed is also putting upward pressure on local currencies across the world, with pass-through to domestic prices as investors exit these economies to seek higher yields in U.S. dollar-denominated fixed income securities. Committee noted that broad money supply M3 grew by 11.05% in August 2022, compared with 8.66% in July. This was driven largely by the growth in net domestic assets (NDA) of 26.19% in July 2022, compared with 22.78% during the preceding month. The sustained growth of the NDA was driven largely by increased claims on the federal government and other financial corporations and the private sector. Money market rates continue to fluctuate, reflecting liquidity conditions in the banking system. Consequently, monthly weighted average open buyback OBB rate declined to 13.21% in August 2022 from 14.15% in July, while the interbank call rate increased to 15% in August 2022 from 13.00% in July 2022. Capital adequacy ratio and the liquidity ratios remained above their prudential limits of 13.4 and 40.1% respectively in August 2022. The committee applauded the improvement in non-performing loans (NPLs) ratio to 4.8% in August 2022, compared with 5.0% in June 2022, reiterating its call on the bank to sustain its tight prudential regime to ensure that NPL ratio is kept below its 5% prudential benchmark. The MPC noted the development in the equities market in the review period, as all-share index decreased to 49,836.51 index points in August 31, 2022, from 51,817.59 index points on June 30, 2022. Market capitalization also decreased to 26.88 trillion naira from 27.94 trillion naira during the same period. The bearish performance reflected sustained profit-taking and sell-off by investors rebalancing their portfolios in favor of higher yields in the fixed income market. The committee noted the marginal increase of 0.39% in the level of external reserves to $38.46 billion as at the end of August 2022 from $38.31 billion at the end of July 2022, despite continued demand pressure. With crude oil price forecast to continue to moderate in the short to medium term, members urge the bank not to relent on its various policies put in place to support non-oil export in order to shore up external reserves. Under the real sector facility, the bank released a sum of 66.99 billion naira to 12 additional projects in the manufacturing and agri sector. These funds were disbursed from the real sector support facility from the differentiated DCRR requirement component of the facility. Cumulative disbursements under the real sector facility currently stands at 2.1 trillion naira, disbursed to 426 projects across the country. Furthermore, under the 100 for 100 policy on production and productivity, the bank disbursed the sum of 20.17 billion to 14 projects in the healthcare, manufacturing, and services, bringing the cumulative disbursement under the facility to 93.39 billion naira to 62 projects. In the healthcare sector itself, 44 billion naira was disbursed to two healthcare projects under the healthcare sector intervention facility, bringing the cumulative disbursement to 130.54 billion naira to 130 projects comprising 32 pharmaceuticals, 60 hospitals, and 39 other services. Under the Export Facilitation Initiative, the bank funded several community projects in the non-oil export for value addition and production to the tune of 3.28 billion. And this is aside the over 50 billion disbursed through the Nigerian Export-Import Bank, NEXIM. The micro, small, and medium enterprise MSME sector, the bank supported entrepreneurship development with a sum of 39.26 million naira under the Tertiary Institutions Entrepreneurship Scheme, bringing the total disbursement under this intervention to 332.43 million naira. Under the intervention facility for the National Gas Expansion Program, the bank disbursed 1 billion naira to support the adoption of compressed natural gas as the preferred fuel for transportation and liquefied petroleum gas as the preferred cooking fuel. Our outlook. The broad outlook of the global and domestic economies in the medium term remains clouded by uncertainties associated with lingering headwinds from the Russia-Ukraine war and the residual impact of the COVID-19 pandemic. Others include tightening global financial conditions with elevated shocks to foreign capital flows as some advanced economies continue to pursue aggressive policy rate hikes, the high level of corporate and public debts with heightened risk of another global financial meltdown, and the high level of inflation across several economies. On the domestic front, available data on key macroeconomic variables indicate that output growth will continue for the rest of 2022, however, at a much subdued pace. Some of these domestic shocks include the high level of insecurity currently disrupting the free flow of economic activities, heightened sovereign risk as the 2023 general elections approach, continued upward pressure on inflation driven by exchange rate pressure amongst other domestic factors. In addition, domestic price development is expected to maintain the current upward trend in light of the buildup of increased spending and demand for money as the 2023 general elections approach. Accordingly, Nigerian economy is forecast to grow in 2022 by 3.52% CBN estimate, 4.20% by Federal Government of Nigeria estimate, and 3.4% by the IMF estimate. The committee's consideration. Ladies and gentlemen, at this meeting, the focus of the MPC was on the aggregate aggressive acceleration of inflation globally and how this had begun to retard growth in both advanced and emerging market economies. Members noted that though the global economy was progressively weakening due to the various headwinds surmounting the recovery, in Nigeria, output growth had been sustained as a result of the combination of development finance interventions by the bank and fiscal stimulus by the federal government. Members noted that in the last 3 years, the CBN had injected over 9 trillion naira into the economy, in addition to offering 2-year moratorium for 10-year long-term loan facilities. The committee believed that these interventions have significantly helped to engender growth. However, in light of the persisting pressures on inflation, the committee encouraged the bank to maintain a close watch on the inflationary implications of these interventions. The MPC noted the moderate downturn in the equities market, attributing it to a continued outflow of portfolio capital as investors reassign their portfolios to more attractive US dollar-denominated fixed income securities. The committee, however, also called on the federal government to continue to improve the ease of doing business in Nigeria, to retain the current patronage of foreign investors through sustained investor confidence in the Nigerian economy. MPC applauded the bank for its continued stringent regulatory measures over the banking system, noting the progressive decline of the non-performing loans NPL ratio of the banking system despite the heightened macroeconomic uncertainties. MPC was concerned that within a 4-month period, inflation had accelerated aggressively by 280 basis points from 17.7% in May of 2022 to 20.5% in August 2022. The committee was consequently of the view that given the primacy of its price and monetary stability mandate, it is expedient that the focus must be to rein in inflation at this time. The committee was therefore of the view that a hold or losing option was not in consideration at this meeting at all. This is also because a loosening will further widen the negative real interest rate gap and worsen the financial market conditions as savings mobilization, investment inflows will decline further. It was also of the view that with the aggressive policy normalization in advanced economies, loosening the stance of policy would result in a sharp depreciation of exchange rate, leading to further hike in capital outflows. As regards a hold decision, a hold would mean a continuous deterioration in real earnings of fixed income earners and the livelihood of middle and low income households. The MPC noted that a tight policy stance would help consolidate the impact of the last 2 policy rate hikes, which is already reflected in the slowing growth rate of money supply in the economy. It also felt that an aggressive rate hike would slow capital outflows and likely attract capital inflows and appreciate the naira currency. Committee's decision. Members deliberated on the impact of the widening margin between the current policy rate of 14% and the inflation rate of 20.52%. At this meeting, the option to loosen the policy rate was not considered, as this would be gravely detrimental to reining in inflation. The committee thus agreed unanimously to raise the policy rate to narrow the negative real interest rate and interest rate gap and rein in inflation. Committee thus voted unanimously to raise the MPR. 10 members voted to raise the MPR by 150 basis points, 1 by 100 basis points, and 1 by 50 basis points. 10 members voted to increase CRR by 500 basis points, while 2 members voted to increase it by 750 basis points. In summary, the MPC voted to 1. Raise the MPR to 15.5%, retain the asymmetric corridor at plus 100 and minus 700 basis points around the MPR, increase the cash reserve requirement ratio, CRR, to a minimum of 32.5%, and 4, retain the liquidity ratio at 30%. Thank you for your attention.
Thank you, Governor. And that was the communique number 144 of the 287th meeting of the Monetary Policy Committee of the Central Bank of Nigeria, that held yesterday and today, the 26th and 27th of September 20.
All right, so that's the decision of the MPC, the 5th for this year. I think it doesn't come as a surprise that it was raised. I don't know if it came as a surprise, the rate at which it was raised to 15.5. Mr. Ebo, what were you expecting? I know everybody was expecting a hike.
Yeah. So I think the pace of increase would came as a surprise. 150 basis points is significant. Trying to look at the past increases that we've seen, about 2.5% this year, that makes it about That's about 5%, 4% we've seen in total in the last 3 MPC meetings. So that's significant. And when you look at the implications, yes, what we would see, and I like that focus on that real return, because a lot of investors will be concerned about that. So that would help bridge the gap. But when we also speak to the FPIs, beyond the attractiveness that the yields in the global space would reduce the inflow. But when you look at the FX structure, there's also a need to harmonize for us to also be able to attract. Before the communique was read, talk about that increase may not necessarily translate into increased FPI inflows, which we need in Nigeria to be able to reduce that depreciation. So when you look at the spread between the official market and the parallel market, as long as you continue to widen, that will continue to put a lot of pressure on inflation.
And I'm glad that he kept talking about the issue of structure. That also came up in,
yes, the structural issues. Yeah. Because it's when you look at those factors that are pushing inflation upwards, that insecurity is a major factor. And you see food inflation at 23%. The imported inflation impact is also there. Yes, it was mentioned that money supply has reduced, but we feel that also with the gap, we know the CBN will still have to support the government a lot in the form of ways and means, given the revenue constraint. And
that's another inflationary pressure. Even he mentioned it that in 3 years, the CBN has intervened with about 9 trillion naira.
Correct.
And that. Let me come to Prof. Prof, we saw the Federal Reserve hiking rates by 75 basis points, and we saw the dollar surging. Now, we're seeing our own MPC hike rate by 150 basis points. Should we expect the naira to surge?
Well, it depends. Let me say that, as you said, I'm not surprised that there's a hike and the rate. My worry is that the hike will not curtail inflationary pressures, because the MPR, whether you are in our context, you increase or lower it, it has no impact on the lending rate, maybe interbank funds. It has been done twice. Inflation kept galloping, inflation, as they say. But central banks don't have much. Central banks don't have another. I mean, their major mandate is on price stability. So they try to increase the MR to fight inflation. But in our context, I would doubt that would do much. But he has referred to structural problems, but he didn't go into detail. He's just at the periphery. All what he said, our economy is not like that of the US, okay? What people forget is that the US economy, they have one advantage. Their currency is both domestic and international. It's a convertible currency. So the exchange rate pass we have here, they don't have it. So don't just follow because, so you have to look at our own experience and then, okay, let me just take you a little bit back. If the NPR has increased by 15.5 now, okay? If you look at that in terms of the inflation rate, okay, you have a negative real interest rate. It doesn't really make sense, But the good thing he has made is that he has recognized that there are structural problems, and for the first time, maybe I'm wrong. He's talked about exchange rate, which is very crucial. So the difference you are seeing, most of it is from the exchange rate pass through. That gap is too wide. We have to narrow the gap. How do you narrow it? It's a big challenge.
The IMF has suggested a unified FX rate.
No, the IMF, personally for me, my own research and everything, our economy cannot afford. A unified rate is okay, but we have to have a managed float. Correct. It's how you manage it is the problem. You cannot free the naira. You have to have a managed float. But how you manage is the problem. So you look at now the rate, the so-called official rate, the IA window, for example, and the rate on the street, the gap is just too much. That's how you look at it, and then you now see how you can narrow it.
So how can it be narrowed? How can it be managed?
Well, you just as Central Bank has done, you can they call it adjustment. You can adjust it a little bit. I don't use
Like
the word
adjusting the official rates?
I don't use the word devaluation. Yes, you can adjust. You can adjust the official
We're running
rate.
away from
Yeah, they call it adjustment. You can do that because that gap is part of the problem, to be honest. That's one. Then the issue which you didn't stress but mention it tangentially is insecurity. We talk about food inflation. That is part of the problem. If you cannot guarantee security, I don't care how you manage your economy, you will not have foreign direct investment. Okay? The portfolio investment you are seeing that is going away because of insecurity. Actually, it's portfolio.
Not because the dollar is more
No.
attractive?
Portfolio investment is hot money. That's because portfolio. Any small happening in the economy, they leave. Okay? The long-run solution to this problem of exchange and whatever, in my view, is to have a productive economy where you export more of non-oil goods and earn foreign exchange. As long as the way we are going, we're going to have this problem all the time. And then the exchange rate problem, maybe my colleague here will allude to it, is a demand-supply problem. But that gap is just too wide. Okay? And he has not given us a solution as to how he wants to narrow that gap. I was looking at thinking whether you see something about how to
time. Well, Mr. Ebo, I mean, the central bank has even talked about it. We've seen initiatives 100 for 100, RC 200, the banned items, that cannot access FX, all in the bid to boost supply and reduce demand for FX, since this is a crux of what's driving, this inflation and all of that. Are we saying those policies are not bringing up the benefits, or is there more that should be done?
Okay, I won't say those policies are not bringing benefits. So looking at even the 1 for 100, based on the last data that about, $600 million have come in as at June. But I think there's something missing that wasn't mentioned, is the oil theft. So when you look at what's our major supply of FX for now in Nigeria, it's through oil. And you look at the last 3 years, it's from Eurobonds that we have been able to shore up our external reserves. Looking at even the data from NMPC, so it's like a double whammy. The oil theft going on, they are not getting enough FX, and you also need to pay subsidies. So from that point...
And subsidy has surpassed $1 billion now for August.
So from that point, the CBN is not receiving enough dollars. And that is where what Prof mentioned in terms of demand and supply. So the CBN is being forced to ration it. And as a result, there's what we call a demand shift. It's moving to the unofficial market, and that spread's getting to over 300 naira. So that's what should be the focus. And I think the best thing that would be done, because it's like we are kicking the can down the road, we would see at 722 naira to $1, God knows where it would stop. There needs to be a major adjustment at the official market, and there needs to be an increase in supply. But beyond that, the fiscal authorities need to tackle the oil theft. CBN needs to be receiving that inflow. We can't, FPI has almost dried up, and we are not expecting them to return anytime soon with the attractive interest rates in developed climes. So if we don't tackle from the source where we get the dollars, the FX, to increase the ability of the CBN, to increase, to have more FX to supply, we can't go to the Eurobond markets now. Yields are getting close to 13-14% in dollars. So that's a major part that wasn't also discussed, that it's really very important, so that we can narrow that gap. If we're able to narrow that gap, over time, confidence may also be restored, and based on that, there will be more supply, because most of the exports, you talked about the export, a lot of them will still prefer, at what rate will they change? Is it at 435 or at 722? You see the wide gap.
Someone noted that even the RT200 seems to be like a punishment to the exporters, because then they have to stick to the official window. Meanwhile, if they were allowed, they could go to the parallel markets and make even more money.
So the people will still look for ways around it because there's that incentive there, over 300 naira on $1. So as long as the incentive remains, no matter, there's a limit to how you can block the holes. As long as, if you don't take, the easiest thing to do is take out the incentive and you'll be able to focus. So I think it's really very important. Then there's something interesting that they also touch on, is on the CRR increase, which is now 32% from the 22.5%. So it means that the amount, when you look at the effective CRR even in the banking system, is close to about 70 to 80%. Yes, the special treasury bills is being used to resolve that issue, but what we would see is there will be increase in deposit rates again, because if I'm giving the bank 100 million, it means that they can only create assets with about 60-something million because of what needs to go to the CBN that has increased. But with the effective CRR that is ranging from bank to bank with 50 to 80%, means that they need to increase the return on the amount available for them. And that's why you would see the special bills is trading at double digits, what CBN gives to them at 0.5%. The banks have to discount it. He also mentioned about the interbank. You see the average was about 13%. So cost of funds will significantly go up. The private sector, in terms of raising commercial paper, would be more, it will be at a higher rate, which would impact on their cost of finance.
But it will be more attractive to investors.
For investors, from the investors' perspective, yes, more attractive to investors.
I also think that going forward, the CBN has done a lot. They've put a lot of money into the system, intervention fund. People to do some work and find the impact. I kept saying the disbursement. What has been the impact? They disburse so much in several ways, several forms. But the impact is not being felt, in my view. Look at unemployment, it's rising. That's how you gauge an economy. And inflation, look at even growth, okay? Well, it has said that the growth will slow down a little bit, but it will still be positive. But growth is not development. So I think CBN should be able to spend some money and find out the impact of what they've been doing. Because people talk about access. People are still complaining about access to some of these CBN funds or intervention. So I hope they will spend more time to look at the impact of all of this.
Another thing about the intervention of the CBN has also been, some economists actually believe that it adds to the inflationary pressure.
Of course.
I mean, 9 trillion naira in 3 years.
Yes, it is.
And then, of course, you have the ways and means also really high. That's gone past.
I think there's, I don't know, when I used to be in the CBN board and MPC, there's a limit you can loan to government. I think it's based on 5% of the last year's revenue.
50% of the last revenue.
So I don't know whether they've exceeded that.
They have.
So
right, Mr. Abel.
Currently, it's about 19 trillion, and it's not being paid
that's what
back
is fueling inflation also. And CBN should tell government, look, there's a limit. We can't go beyond this. Let's find other ways. But again, it's become dicey because it's banker to government. But it has to be done. So, as I said, the problem is much more structural. You know, so hiking the MPR, in my view, will not do much going forward. Inflation we are seeing, I just pray it doesn't become runaway inflation.
So, because I wanted to ask, Prof, if you paint the picture for us, I don't know how effective, even you have said it, that hiking interest rates does not necessarily, in our own context, deal with inflation. What are the possible scenarios? Inflation keeps surging, interest rate keeps being hiked, and of course we have the threat, global recession. What are the possible scenarios for Nigeria?
It's a big question. One of them is very easy. If you can solve the issue of security, where farmers can go back to their farms without being scared, produce enough food, the food price will come down, and that will affect the inflation rate. That will not solve, to be honest. Okay. The other issue is all this ad hoc posture of government. PMS, some months there will be shortage, increase in tariffs, There's not been planned for. All those things are part of the problem. And our economy is not a productive economy. I don't think we are. Maybe he knows better. We are just a consuming economy. So until you change that trajectory, it will be very difficult. And also, let me say that there are countries with high inflation and they are doing well. It's possible you have high inflation, you are doing well. That's also the trick. Because inflation, in a sense, too, is a price. Huh? In fact, years back, countries used to induce inflation in order to attract investors because of higher prices. So 20% is high, there's no question. But we can get around it by managing the economy properly. Someone mentioned the fiscal side as to this own job. Now, in the next few months coming, politics will overtake economic activity, and that will be a problem. We're not saying that, but a lot of spending by politicians, okay? Spending both naira and dollars. They will say, part of the dollar thing you are seeing is people hoarding dollars to use for elections. It might, people have said so, and it's not wrong. So there are a lot of issues. So that's why our inflation is not longer, it's not necessarily demand type. It's demand, supply, structural. And so we have to implement a lot of our investment policies.
Yeah, because I wanted to ask Mr. Ibo, good you brought in the issue of election. How much of this inflation is tied to politics? I know I was at the last MPC, and the CBN governor alluded to what you said,
yes,
that some politicians are now hoarding dollars because, it's more value, so you have less currency or less notes to carry for higher value. And of course, there's also the issue of uncertainty that comes with the change of administration. That's also in the air. So how much of these can we connect to politics, elections?
Okay, thanks. It may be difficult to quantify it, but we're sure that that demand is real in terms of demand for dollars, because it's easier to move around with dollars. And it's also a period when you see a lot of people relocating. Demand for that dollars is also very significant. And because of also the reduction in the supply in the official window, so for most of the manufacturing, they use what we call blended rates. So maybe CBN gives you, based on CBN, you get 10 or 15% from CBN, and you have to source for your dollars about 80% of it, and you have to blend it. So that's really very important. And there's one of the questions that you asked, Prof, in terms of some of those solutions. We need to also move away from funding consumption to funding production, because we need to produce. Because the issue of insecurity, there's that strong correlation, which Prof will also be able to attest to, between unemployment and insecurity. No matter how we try to throw money at solving insecurity, if we don't create jobs, and how do we create jobs? Is by producing. Yeah. So if we fund production, we try to domesticate a lot of locally produced things, most of the government. So all this funding goes spending that, even if we say it's high, is being consumed internally. Some of the social intervention funds, why we are not seeing much impact, is that we don't even have the data. We don't know if it's getting into the right hands. Because when you say economics, when they inject funds they inject it to spur demand. And we're not seeing that demand. And you see, for some of them, they pay monthly stipends, and they know those monthly stipends are not saved. They go and buy. So that's poor demand. We are not seeing that. So there's a lot of analysis that needs to be done to the 9 trillion.
And a lot of restructuring.
Yes, that needs
if the Nigerian economy should be able to respond, to policies the way other economies are responding.
Correct, and we shouldn't be excited about positive growth.
No.
For us to have meaningful impact in terms of standard of living, we need to be growing at a level of about 7%. So,
I thought they said it was 5%.
No. And even if it's 7, but between 5 and 7%, for us to actually feel that impact.
Yes,
growing below the 3% when you have your population at almost the same rate more people are going into poverty.
Yeah.
So it's not something to rejoice about that, oh, we will remain in positive growth rates. We should be growing at above 5 to 7%.
Even if you grow 5, 7, you have to sustain it for a long
Okay.
period of time. Not 5% one year, next year 3% another year. No, it don't help.
So when we hear countries like the UK, they're on the verge of recession.
Yes.
And we are still recording growth.
That's what I'm just saying. You can.
We shouldn't be happy
It's
about
like the
it.
last time we exited recession by 0.11, and we're excited. But you look at unemployment, look at inflation. So you can technically exit the recession, but you still have problems. You have to grow at least 7% or 5%. Even normally, it should be double digit. People say if you grow 5, 7% and sustain it for 10 years, you can have a dent on poverty. But that growth has to be distributed by government in terms of other.
And this dent, I don't think we can do it except we deal with that structure. Because as you noted, we have a lot of CBN interventions, but can we really trace the impact of it and follow up and say, oh, because they did this, then we have seen this?
Yes.
All right, we just have a couple of minutes left, but we'll take a breather, take a short break, and then we'll be back to conclude this MPC Decision Day conversation that we are having. Stay with us. It's still MPC Decision Day here on Channels Television. Let's cross over. Alan, the CBN Governor is answering some questions. So let's get a bit of that just before we close the show. Fortunately, we seem to have a bit of technical issues there with hooking back up. So let's come back to the studio. So now that we have CRR 32.5%, liquidity ratio retained, asymmetry corridor plus 100 minus 700, MPR 15.5. Prof, what are your expectations in the coming months before the November meeting? What do you see changing?
Because politics will overtake everything. We don't normally strike a balance from history. When politics comes, everybody abandons what they are doing in the economy. So I don't see much, For example, we never had it so bad. Now, in most countries, politics will be going on and there will be economic activity. In our case, it's like we abandon the economics and stick to the politics. So I want to be surprised that there will be positive changes, but I would doubt it. In terms of what? Becoming a producing economy in a few months, when you put in the policy, it takes time for it to begin to germinate. So I think right now, let me say that we still have a few months for or to show some seriousness, to change direction, if we want to do that. But I think for now, in my view, things just go the way they are going.
Well, obviously, inflation will keep surging.
Inflation
because
will
you
keep
have the political money
spending money.
Going into
even
the
though
economy.
inflation is more of a monetary phenomenon, even the fiscal side can reduce inflation. This spending is also a problem, and they will spend. So, once inflation is going up, more people enter the poverty space. It's going to be tough. And as you said, you may now begin to have more social programs.
All right, Prof. I think this is what we have the CBN now. Let's just take at least the last part of his answers to the questions.
What are the outcomes of the meeting summit? Like I said, the outcomes have been very good for the RT 200. We promised that there will be two summits in a year. We held one a few months ago, and I'm sure before the end of the year, the organizers will hold another one so that we can take stock and begin to also seek people's views about how we can deepen non-oil export repatriation into the country. Lastly, on somebody asked a question that we recently reverted interest rates on intervention from 5 to 9%. Observers are keen to know what the impact of these interventions are. Like I said, We've so far disbursed about 9 trillion naira in interventions. And I needed to say that because I think that skipped me. The fact that we are saying that inflation is core and most important for us at this time does not mean that we would not continue to support very, very important and priority projects through development finance. But the pace at which we do so will certainly reduce, because we truly do want to see ourselves exiting quasi-fiscal responsibilities. So now, talking on the COVID-19%, we can say the outcome has been very good. We are happy about the outcome so far, that it has been extremely impactful in improving output growth in Nigeria. And we believe that with 10 years loan, with 2 years moratorium, at 9%, that it will be difficult to see that again. And I congratulate those who have tapped into it in the last 2.5 years, to the extent that today we can beat our chest and say that we disbursed 9 trillion naira, 10-year loans with 2 years moratorium at no more than 9%. We have not started to see the impacts yet. And I can tell you, even notwithstanding the inflationary pressures we're going through, that is the reason we're optimistic, and we're saying that, yes, growth is expected to be retarded by an aggressive rate hike, but we do not think that it will really affect Nigeria that much. And that is the reason you may have all read that Nigeria remains one country amongst very many in the world where the IMF has decided to retain our growth rate at 3.4%. So I thank you very much for your attention.
Thank you, Governor. Let me just quickly.
So that's it. I think one thing of pride there, gentlemen, is that the CBN Governor is glad that IMF has retained our growth rate at 3.5. But you have said, I mean, 3.5 is not what we should be celebrating. It should be between 5 to 7, according to you, Mr. Abel.
Yeah, correct, because we need to look at every Nigerian want to see what's the impact mean, because if other resources in terms of population were growing at almost the same rate, it means the little resources, there will continue to be pressure on those resources. And we talked about the structural issues that would also compound it, and cost of production, cost of the demand would increase, and that would impact on inflation. So I think it's good that the CBN, the IMF retained rates at growth rate at 3%, but our focus, because we need to be focused on the impact on Nigerians' standard of living. How many people are we taking out of poverty? So that's because if we don't do that, insecurity would be a major problem for us to tackle.
So, Prof, talking about making the impact on Nigerians, because a lot of times when we sit here as journalists and talk about, oh, GDP growth is at this rate, inflation is at this rate, we get comments like, what's my business with that? Okay, the MPC has met today and given numbers. So what's my business with that? How does it concern me? How does it concern the money that I have, my purchasing power? How does it concern my everyday go? Even sometimes when we talk about inflation or the basket that is being used to measure it, a lot of Nigerians believe it's not sufficient to capture the reality of what they are feeling and what they are living with.
Yeah, you know, I think I've said it before that people don't eat GDP. Anyway, but inflation is important because it means that you buy now few goods and services. It affects the poor more. And even in our context, even the so-called middle class, because your purchasing power has reduced. That's why we worry about inflation. But to be honest, GDP, economists use GDP and other factors to gauge the well-being of an economy, not just GDP. Because GDP really is an average measure. It gives you an indication, but it doesn't say much. That's why we kept saying growth is not development. Okay, it's an average measure. If you have 40 naira, you have 20 naira, that's 60 naira. Divided by 2, you have 30. You say you have 30, you have 30, but in reality, you still have 40, you have 20. but it gives a picture because we can produce more goods and services. Maybe we can go around, okay? So those who believe that GDP growth can help, it has to be sustained for a while and then trickle down. That's why you need government policy to fast track. In our context now, we want to fast track development. We want to fast track growth. That's why we're talking about the economy should be productive. People say it doesn't concern them because when they go to the market, they don't see things being cheaper. Okay? And to be honest, the basket they use in calculating these things in the FOS has not been changed in 2009.
Exactly. I think that's also another conversation we've been trying to push out there.
It's like these GDP we talk about. Normally, you rebase your GDP after 5 years or so. We waited for about 20-something years before we did it. So these are some of the problems of the economy. But if we had done it earlier, we could have seen some of the challenges and tried to fix it. Okay? So we need to manage the economy properly, and data is very crucial. You don't wait till 20-something years to rebase your GDP. You don't use a basket of goods for 13 years without looking at the component. So are you including, like now we are saying insecurity, are you including, okay, we take out food inflation, that's fine. But the other items that we need to look at and maybe change and include new ones.
Who should restructure the basket?
In the MBS, the National Bureau of Statistics, that's their job to do it. And then they normally use consultants and so forth. I want to look at an issue about the IMF. See, the IMF projection doesn't change much from the MBS or the CBN projection about the economy, okay? If the IMF say the economy is doing well, that shouldn't make you be excited. You know, in a sense, it's okay, but it shouldn't. Our own people too have said that the economy will grow at 3.2, 3.4. MBS, CBN.
Federal government.
The IMF gives a lot of confidence in the global system in case you want to go to borrow. Yes, so, you know, so.
All right, gentlemen, thank you so much for your time. This conversation we've had before and after the MPC decision for the month of September. Of course, we'll be looking out to see the impacts that it will have on the economy. Professor Afaniku and Mr. Ayodijebo, thank you for your time.
Thank you very much. Thank you. Thank you.
It's been a special edition of Business Incorporated. MPC decision day, we heard that decision. It's another hike by 150 basis points. And of course, it's all to curb inflation. We'll see how far that goes in dealing with inflation. And as our guests in the studio have put it, this is election period. More money is likely to get into the economy. And that is another major inflationary pressure. Well, to follow up on that, tomorrow on Business Morning, we'll follow up on this conversation. Do join us then. I'm Ini John Mekwa. Enjoy the rest of your day.